Happy Friday. We are back for another episode of the Tech Behind FinTech. As always, I'm extremely excited to be here, extremely excited to be hosting this show. So, on the Tech Behind FinTech, we talk about the technology behind the FinTech industry. I like to say the technology that powers the money. So today's a solo show meaning I am here hosting the show solo, and we will get into some news topics of the week that I found interesting. And it's funny because it's like a rabbit hole. Sometimes, I read these articles and it's terms that I don't understand, on the business side, and then I start drilling down and then, learning more. And then, when I do that, I bring it to you guys. Some of you may not be familiar with some of the terms. Some of you may be very familiar. And if you are very familiar, please feel free to chime in. Even if you're not very familiar, if you have any questions, feel free to chime in. And if I can't answer it, and a lot of people have the same questions, guess what? We will bring a guest on that has an expertise in that to answer all those questions. So my name's Nnamdi Osuagwu. I am the host of the Tech Behind FinTech, also CEO of Strategic Generation, our proud sponsor of the show. So what is up first that we will talk about? A couple of new things happening. Today's going to be a lot of crypto talk, a lot of more in the blockchain industry and some things going on there that I found some interesting articles, and we will talk through that. Let me do I like this shared screen aspect because then I get to show you guys some of the articles. Also, what I'll do, as I did for the last couple of weeks, I will post the links to these articles. So if you want to follow up for further information, they'll be in the comment side. All right, let's jump into some stuff, man. Let's get into it. Let me do trying to do a full screen on this thing. Give me a second. Give me 1 second. There we go. Some technical stuff we had to deal with. And you guys are still seeing the it's interesting what's going on here. Hey, 1 second. Having a little bit of technical issue that I kind of want to show something, and it's not doing what I would like it to do. I hate when that happens. So we will sort it out. It's the beauty of a live show. It's showing the entire PowerPoint. I wanted it to just show a little bit of it, but you know what we'll do? Fine. I don't think you guys, when that happens, I don't think you can see the actual, it's not as clear as I would like it. So what we will do is let me sort this thing out for a second. Hard to have it like a screen behind so you're like seeing my nose. I don't like that, but just give me a second. Let me just sort some stuff out. And then I will bring it to you in 1 second. What we do, you know what? We're gonna just go for broke and just do that. And let's do something here. All right, I don't want to play around with this too long. We're just gonna go for it. And I'm gonna be talking through it anyway. So forgive the snafu. I didn't want you to see the PowerPoint, and then my F5 is working on my side. It's a full screen, but on the shared screen, it's not. So we'll just go through it. So anyway, back to today's agenda. Pardon that. Let's get into it. So the first article of the day, Circle Internet Financial, right? So I got into this article because they actually lost 2 million from email fraudsters. So They're about to go public via a SPAC, and we're going to get into what a SPAC is. But this particular SPAC is called Concord. They're going to go public via SPAC. So when you go public, you know, you have to go through some SEC regulations and disclose certain things. So they disclose, because I'm always looking for the technology aspect. So they disclosed that they lost 2 million to some email fraudsters. But they didn't really go in depth, right? So it's like a rabbit hole. You uncover the email thing, and then obviously I'm learning more about what they're going to go their public offering through the special purpose acquisition company, Concord, and then learning more about Circle Financial, Internet Financial, and then then I'm like, oh wait, what's the difference between a SPAC, IPO, and a direct listing? So I'm going to talk through all that in this episode, and the main thing I wanted to touch on was this email. Them losing 2 million to some email fraudsters. They didn't elaborate on the incident on the SEC. So here's the thing, right? When companies are compromised, after the fact, after they get through it, because this happened like last month. So once they get through it, bringing that information to the public is extremely vital just for the industry in general, right? Because from a security standpoint, we learn more when things once we study vulnerabilities and past incidents. That's how we learn to harden our harden our different platforms in general, especially from a vertical standpoint. So I'm a consultant, so when I talk to clients and the whole rule is you can never trying to shoot for 100% security, right? It's not really, I don't know if it's going to happen, but what you do is, depending on your vertical and depending on the threats to your vertical, that's how you prioritize what you're going to tackle next. So you basically say, okay, well, if I'm on a fintech side, here are some past incidents that happened to similar companies. So when, so that's obviously something that threat actors are doing in this particular vertical. I'm going to prioritize my hardening, my systems hardening, and just my various defenses from that priority list. So, so we learn when companies are really transparent after the fact, this is how it was compromised, and this is what happened. We learn as an industry, okay, how do we become more secure? What are some precautions we have to take, right? It's like what do they call it? A cat and mouse. It's constantly moving, right? It's not a situation where, you're secure today and you'll be secure forever. No, it's constantly moving. You're constantly figuring out. You're constantly learning from past incidents and so forth. So that's from a technology perspective. That's what really caught my eye, was the email fraud incident they had to disclose. Now, from an industry perspective, really started to get really curious about Circle and what they're doing. So essentially, Circle was started by Jeremy Allaire and Sean Neville. Circle enables businesses to use digital currencies and public blockchains for payments, commerce, and financial application. It's in the principal operator of the digital currency USD coin. Oh, friend of the show. I think wait, let me add this comment. So wait, that's what Circle does, but we have a comment from the audience, and that always takes a priority. And we'll jump back to Circle because I love the conversation. So LinkedIn user, I know this LinkedIn user I see it on my other phone, Medina Williams, friend of the show. Happy Friday, Medina. All right, Medina's comment. I like to think we are playing an infinite game from a tech security perspective. Yeah, I mean, it's definitely an infinite game. I don't see an end in sight. It's not going to be, all of a sudden everything's 100% secure, and it's always, yeah, it's total infinite. But my point earlier was when companies are transparent with previous incidents, it just helps the industry get stronger overall, because now we learn about that particular breach, and we learn how to secure it for the future. But totally agree with you on the infinite game we are playing. Infinite. Oh wait, hold up. You have another comment. I feel so to read the whole thing. So I think we are playing infinite. We are playing an infinite game from a tech security perspective, but with a finite solutions at times. That is absolutely correct. Definitely agree with you on that particular standpoint. It was an intro. Matter of fact, I think I had a couple of episodes ago when we talked about API vulnerabilities. I think I had some interesting charts around that. 100% agree with you, Medina. Appreciate the comment for sure. I like that. Infinite game with finite solutions at times. Sounds rhythmic, like rhymes. I like it though. It's like technology poetry. Yeah, so what I was saying with Circle, right? So essentially, yeah, it's a peer-to-peer payments company and it's evolved into an infrastructure company supporting much of the blockchain industry. Their three main business revenue drivers are it revolves around the USD coin. It's USDC. It's the stable coin it created in collaboration with Coinbase. And for those of you who do not know what a stable coin is, essentially, you know, see other cryptocurrencies like Ethereum, Bitcoin, the most recent famous Dogecoin and things, right? You see how it fluctuates. The whole point of a stable coin is it's the word stable, right? It's backed against something stable like the dollar or gold or something where you're not seeing fluctuations and how it's used sometimes. I mean, a lot of times is you can now use those cryptocurrencies for different transactions and so forth. Also, sometimes you may own like a Bitcoin or Ethereum, and you may play the game of trying to get the spread. So you want to, so let's say a few months ago Bitcoin was 65,000 or 64,000. Let's say you say, okay, you know what, I'm going to dump crypto. I don't want to get the money in my bank account, but I want to put it in a stable coin, and then I want to buy it back when it's a little bit lower and then keep the spread. So stable coins allow you to do that without having to worry about those price fluctuations. So that's part of their business that it created with Coinbase. That so another way that they make money. So transaction fees on the USDC and interest earned on its reserves, and transaction and treasury services, they call it TTS. Seed Invest is an equity crowdfunding platform it purchased in 2009. So I think in Q4 they're expected to go public via a SPAC. And right now, so understand, so USDC has grown to about 25 billion outstanding from less than 1 billion a year ago. So that's a huge growth. But when we talk about the stable coins, right? The biggest one right now is Tether. So Tether is USDT. They're the largest in the cryptocurrency category with about 63 billion in assets. You know what was interesting too? Let me see if I posted this to jump into Tether. So another interesting article came out this week was more speculative, but just saying if Tether broke down its reserves for stablecoin, the firm revealed that only a fraction of its holding, 2.9% to be exact, were in cash, while the vast majority was in commercial paper, a form of unsecured short-term debt. So So one of the things article that came out and said, basically if something happened to Tether, right, it can be a black swan event for the rest of the crypto industry, right? So with the holdings it currently has, it says Tether is placed in the top 10 biggest holders of commercial paper in the world, according to JP Morgan. Tether has been compared to traditional money market funds, but without any regulation. More than 60 billion worth of tokens in circulation, Tether has more deposits than that of many U.S. banks. So I found that article that came out. As a matter of fact, a couple of things I want to start doing, like in midst conversation, so you guys have it. I'm going to post these links because I think it's just good follow-up stuff. So on the Circle Financial going public, let me post some links right now. This way, if you want to follow up on your time, you can, and it's in line with the show. Usually I post it at the end, but I want to post it right now so it kind of goes in order of me talking about this stuff. All right, so that post, because we're live on LinkedIn, Facebook, Twitch, and YouTube, if I'm not mistaken. All right, yeah. So that's that, right? It was interesting. The reason I brought the Tether article up because it's in line with the stable coin. So that was an interesting article. As a matter of fact, let me see if I can find that Tether article for you guys. Give me a second. I don't seem to have that readily. Oh, here it goes. All right, here's a Tether article. Like I said, pure speculative. They were just saying if it were to crash, it can really bring down a lot of the other cryptos. But that's the whole point of a stable coin. It shouldn't. So I found that article very interesting as well. All right, let's now move on to. So one of the things that I've always heard the term SPAC, and for a while now, referred to as a special purpose acquisition company. So I was curious, right? I was saying, what's the difference between a SPAC and a IPO and a direct listing? So basically it was in line with the circle. So sometimes you're reading this stuff and other terms come out and it just starts this rabbit hole. So although we focus on the technology, one of the most invaluable things is, from a technologist perspective, having an understanding of aspects of the business. It's definitely an invaluable thing to have, so you can kind of you don't have to be like a necessarily a trader per se, but it's good to have an understanding of what's going on there. So sometimes I start diving into these articles to learn more. And like I said, my goal is to then talk about it on the show. And sometimes when we dive deeper, we'll just bring a guest on who specializes in this stuff. But overall, right? So a special purpose acquisition company is a newly created shell company formed by a group of investors known as sponsors. Sponsors raise funds for the SPAC through an initial public offering, a process in which a stake or an entire private company is publicly sold to institutional and retail investors in the form of shares. Stock is also used interchangeably. A share is a unit of ownership in a public company. Okay, nice. We have a comment from the show. Can you elaborate on how they work in harmony? Let's see another comment from Amir. I understand, and some may not just be saying. All right, yeah. So that we can definitely get into that. Good question. And this is something like in researching for today's show, like I said, I heard these terms understood generally, but I wanted to kind of dive in more. So we're gonna definitely talk about that right now. Thanks for the question, Amir. Appreciate you. All right, so let's get into it, right? So essentially, from my understanding, there are three ways a company can go public, right? Through a SPAC, through an IPO, which we all heard about, IPOs and this company's going public. I think that's pretty much known, and a direct listing. So let's get into what all of them mean. Let's start with the SPAC and some reasons why companies may do that. So the SPAC is the overall, and essentially they're basically merging with the private company to bring them public under their banner, but it'll still be known as, like, that company's brand will still be in place and so forth. Hold up, I don't think on my show, I don't think we moved from. Hold up, something's going on here. We didn't move on the shared screen. You guys are not seeing what I'm seeing on my other computer for some reason. Give me a second because I have it. I have it on the other side. I wanted to kind of show slides as I'm talking about it, and therefore I'll make it a little bit more clear. But for some reason, that functionality doesn't seem to be moving on the other computer. So that's unfortunate. So what I'll do is we'll just talk through it. The screen share function is not working as I would have liked it to have worked. So neither here nor there. It's all good. So I'm just going to kind of talk through it. So yeah. So essentially, the advantages now. So you start looking at the SPAC. So and going public through a SPAC is easier and faster than IPOs. There's less regulatory scrutiny, and the target company is not required to provide detailed financial information. The fees are higher than direct listing because SPAC sponsors are interested in profiting from the deal. Investors in the SPAC IPO may not know about the target company and the price. So what does that mean? So if you look at a SPAC, that's the overall. It's just mega funded company, and the whole goal is that's one of the goals, right? They're gonna go merge with private companies and help bring them public. So it seems like an easier route from a private company to go public, and they obviously make money from their fees higher than a direct listing. So if you look at the deal we just talked about with Circle Internet Financial, and you can research Concord, the Concord Group, that's what's bringing the public. And I think I posted a link on that. Hold up, let me see if I have a link. Yep, I do have a link. So now we're talking about the definitions, but here's an actual use case on that. And I'm going to post um, another article on the breakdown that I found. SPAC. Let me hold up. I'm just writing it right now. Concord SPAC. Putting the comments down right now. All right, so that's an article that you can learn more about this particular deal. So it's good to see the definition and actually happening in action. So that's the overall definition of a SPAC and some of the advantages. I mean, the whole goal is to get obviously the underlying target company public. Now, the next is an IPO. So this is what we heard about. So companies going public via IPO, they're supported by major Wall Street institutions that have a wealth of experience in this space and help to value the company fairly. So they'll get the valuations, and we all heard this. Like we've seen when companies go public, firms like J.P. Morgan or Goldman Sachs or so forth, or the institution backing that deal, right? So in this, when the IPO happened, new shares are created and sold to investors. IPO firms have to pay considerable fees to underwriters. So, like I said, we've seen in the past, various institutions underwriting these types of deals. The banks that provide guarantees to investors. So company going through an IPO have to host roadshows to promote their business to prospective investors. There is more regulatory scrutiny during an IPO, including the filing of an additional underwriting contracts. Investors know the ins and outs of an IPO firm thanks to the financial disclosures. Often there is a post-IPO lockup period during which the company's employees cannot sell stock. So what did we just talk about? Talked about the SPAC. That's one, right, in which a bigger firm now merges with a smaller private company to help take them public. That's part of their business. We posted a link about that. That is an example of what's happening with Circle Internet Financial Group and Concord. Now we talked about an IPO and how, the major Wall Street institutions will underwrite those deals. The next is, and the last, direct listing. So in a direct listing, the company sells shares directly to investors without intermediaries, underwriters, and roadshows. Unlike in an IPO and SPAC, companies going public through direct listings don't issue new shares, but sell existing outstanding shares. Direct listings are best suited to well-established businesses that have a strong market presence and do not require the support of intermediary financial firms to promote them. So, I mean, you think about it, right? So if from an IPO perspective, the financial firms are promoting and doing roadshows because they want to gain investor interest. They want their initial stock price to, get a higher valuation. Direct listing, you basically are directly going to investors. So an example of a direct listing offering, I mean, if we're talking about in the crypto world, Coinbase, they went public through a direct listing. So if you Google that and Google Coinbase direct listing, you can get more information. Like that's an actual use case of what happened. And Coinbase was hugely popular. A lot of us who, it's other exchanges, but that's like the most that was a real popular exchange for a number of years, and they went public this year through a direct listing. So once again, as you know, I just went down the rabbit hole because it all started with email fraud, the email fraud vulnerability. Because even in the SPAC deal, you don't have to go as in depth in terms of the disclosures, but you do have to disclose something. So that came out in Circle's disclosure. And then once you start going down the rabbit hole, here's where we find ourselves. So that is that. We're going to now move on to a different article. Oh, you know what I'm going to do for the public too, because I think it definitely is some interest. It's good to know too, because especially if you're in a market of buying stocks and for, in terms of that asset base, it's good to know how certain companies came to the market. So this is a really good article. I got this information on the differences between SPAC, IPO, and direct listing. So I'm going to post it right now for you guys. Boom. It should be now on all platforms. So you have that information. Okay, what is the next article of the day? I really want to get the shared screen to work because I like you guys seeing some of this stuff in the background. You know what? We're gonna skip it because I don't like solving technology problems live. It's like I'm gonna start debugging, it's taking time off. So we're just gonna kind of go through it. Comment from Amir, good links. I appreciate that. Appreciate you watching the show and interacting with it. Definitely. Like I said, I'm a little bit of a I'm a total information nerd. Especially this is my industry. So and the target, what we, how we work with clients in this particular industry. So I go down plenty of rabbit holes. So when I do these solo shows, I'm just going to bring you guys on the journey of the rabbit holes and post where I got the information from. So thanks for watching, the man. Appreciate you. Okay, let's go on. All right, so another article that I want to cover that happened is decentralized autonomous organization. So in Wyoming, recently, July 1st marks the first time individuals and organizations in the blockchain industry can create a legally recognized decentralized autonomous organization in Wyoming. Prior to that law, which was passed in April, no formal legal recognition of DAOs existed anywhere in the world. So a decentralized autonomous organization, basically it's an informal organization of individuals who rely on smart contracts to enforce collective decisions without human error or manipulation. So it's totally autonomous, totally relies on smart contracts. Very interesting stuff, right? So it's frequently deployed for many purposes, such as decentralized finance, which is called DeFi, governance, fundraising, exchanges, real estate lending, all powering billions of dollars in transactions without intermediaries. So it's totally um, autonomous. The opposite of a formalized corporate entity. So DAOs disrupt regulatory frameworks from entity formation and governance due to the lack of centralized individual or group operating entity. So the article I read, they had a really good example. They said, for example, Elon Musk controls Tesla. It has controlling authority over whether Tesla will accept Bitcoin as payment for Tesla cars. Imagine if instead all Tesla owners had this decision-making power and voted on whether Tesla would accept Bitcoin. This represents the shift from authoritative to DAO collective decision-making. Real interesting stuff. Matter of fact, it's so interesting. I want to dive in deeper on that topic with a show. I'm going to bring one of my blockchain SMEs on, and I just want to go back and forth on DAOs. So you start looking at like Bitcoin. That was like the first in 2008, right? Hold up, we have a comment. I'm just gonna finish my thought, right? So you start looking at Bitcoin in 2008. You could just do currency, but like Ethereum came out, I think in 2016. That changed the game because now you can put applications on the blockchain and you can engage with smart contracts. Basically, a whole application on the blockchain. So if you Google smart contracts, real interesting stuff. We're actually, I'm part of a research initiative in the Cloud Security Alliance, and we're looking at security best practice and overall blockchain, but I'm part of the team looking at security for smart contracts, particularly in the financial services industry. So it's very interesting stuff. Yep. Okay. Amir has some comments. Let me post it up. Smart contracts are not always transparent. It's not sure if it's by design. Can you elaborate if you have time? Yeah, so let me see about that. We say not okay. Let's break down that question. Smart contracts are not always transparent. Not sure if you have if you yeah. So interesting stuff. I'm trying to understand. We say not always transparent. It's out there. I mean, once it's deployed in the blockchain, it's immutable. So anyone can see what's going on. So I want to just get more clarity on your question. Like I basically create a smart contract, and that's the one of the dangers of it, right? Because in other situations, if I create an app, for instance, you may not get that much insight to the code, but once I deploy it on the blockchain, and everyone can see. That's why it's really so important to take care of the security prior to deployment. That's some of the stuff that we're looking at. I think I'm going to give some instances on that. All right, so let's see what we have here. Maisha Hendricks, great info. Oh, thank you very much. I appreciate that. And thank you for tuning in, Maisha. I appreciate that. Definitely appreciate that. Yeah, yes, absolutely. ERC20 referring to Ethereum and certain standards. Maisha says, thanks for sharing, Amir. Okay, so yeah, Amir must have told Maisha about the show. So thank both of you for tuning in, and definitely thanks for sharing. Please, everyone else share. Definitely appreciate that. All right, so now you're talking about your earlier question, for instance, when they are created, it's in code. Yeah, that's a fact. So, if I'm designing a smart contract, it's so all right, let's take a step back. It's a way of codifying a legal contract. So, wait, you have another comment. Wait, and what is coded may not be clear to some. Oh, yeah, that's absolutely correct. I mean, it may not be clear. Maybe I'm just looking at it from a developer standpoint, not as a person. Yeah, so who's not. So yeah, so for sure, it may not be okay, I think I understand your question now. So yeah, if you're not developing it or not familiar with a particular platform, or the code that's used on that platform may not be as transparent. But the whole idea about it is we all know about legal contracts. So the whole smart contract idea is, what if a legal contract is all right? So me and you get into a legal contract, right? Something happens and I need to enforce that contract. So if it's a breach of contract for some reason, or not even a breach, but let's just say we're going back and forth that you have to pay this and we're contractually obligated. It's still a manual effort to do that and to enforce at times. The whole idea of a smart contract is we take those same legal guidelines, codify it, right? And now it's automated. So it's things outside of the smart contract called oracles. That's basically, so when you put the smart contract on the blockchain, it could interact with the outside world, and those entities, we call that oracles, those information. So now if something happens, let's say for instance weather, and let's say we have an insurance smart contract, good example, good use case, right? And I say I'm a farmer, and I say if the weather is 115 degrees for 30 days straight, I need to get compensated for that. And because I can't farm, so I bought insurance on that. So now if my smart contract is interacting with some external oracle, let's say that has information on weather, now it's tracking, all right, let's say it's 30 days hit and the weather's been averaging 115 degrees in this region. Now that can invoke something automatically. Now that's the whole idea about it. It's all autonomous. But yeah, if you want the exact definition, I mean, definitely you can Google smart contract. But yeah, so that's what's happening in the reason we got on that is because of the decentralized um decentralized authority, autonomous organization law in Wyoming. And I think that's an interesting precedent that's been set, and let's see where it goes. And like I said, that's something that we could dive deeper into on a future show. I just wanted to kind of touch base on it. Here's the article in regards to it. Let's see. Boom. All right, so now that's out there. All right. Last article of the day I want to cover. So so there was some sanctions that represent the largest financial penalty ever ordered by FINRA. This actually took place June 30th, but I just learned about it, so I said I wanted to bring it to my audience. I didn't talk about it yet. Essentially, FINRA ordered Robinhood to pay $70 million in penalty for false and misleading information. The U.S. Financial Industry Regulatory Authority, FINRA, has leveled a $57 million penalty and a $12.6 million restitution plus interest to thousands of harmed customers. So if you have a Robinhood account and you were trading last minute, I mean, yeah, it was crazy last year. I mean, with certain trades going on, and especially when it came to GameStop and a lot of these, we did shows on it, and I know I was on the on Reddit, and people were like go beefing that they couldn't trade. I don't have personally a Robinhood account, but others that have, it was a pretty big issue. So since then they have been fined, and let's talk about it. The harm refers to those who it says receive false and misleading information from the firm. Users affected by Robinhood system outages in March 2020, and customers the firm approved to trade options even when it was not appropriate to do so. The lockout prevented customers from accessing their accounts at a time of historic market volatility. It said FINRA also makes reference to the case of 20-year-old Alex Kearns, who committed suicide after thinking his trades left him $700K worth of debt. The regulator says Robinhood's miscommunication led to customers suffering more than $7 million in total losses. So one of the things, so Robinhood relies on, they said at the time, algorithms known as option account approval bots to approve customers for options trading with only a limited oversight by the principal. So FINRA claims that Robinhood also failed to reasonably supervise the technology that it relied upon to provide core broker-dealer services. So much to unpack in that article. Just looking at it from a, Robinhood's a startup, but they've more, really been out there advanced, well funded. But to now smaller shops, right, that are just started out, regulatory fines is a thing, right? I mean, I know a lot in the industry right now relying on AI and different things, but still has to be monitored somehow by principals. So I think all of these are like good lessons to learn, especially for smaller startups in the fintech arena. Hey, let me post that article right now. The article should be being posted right now. Or okay, boom, boom, boom. There it goes. Okay, I think I posted something weird. Pardon that. All right, so yeah, that concludes everything that I wanted to talk about today. Some interesting stuff. Like I said, I found quite interesting. So I just wanted to bring it to the show and have a good conversation. It's pretty current. These things are actually happening right now. So yeah, that is a wrap for today's show. It's a little bit of a lag sometimes between the this recording. I mean, not recording, but us being live. And it's not like it's like I think it's 10-second delay. So I'm just gonna wait to see if there are any more comments before I tune off, because sometimes that happens. Sometimes I end the show and people are still talking. So I'm going to give it a little bit. If you have any more comments, questions, this is the time because we are about to wrap up. That's crazy. Like sometimes I can't believe that I went for 14. Oh, okay. Here's a great comment that I always like. Okay, so I totally forget. Maisha Hendricks, when will you be live again? Maisha, we go live every single Friday, 12 p.m. EST. So that's when we go live. And you can also look at our past episodes. You know what? Do I have a link to our past episodes? Give me a second so I can find a link to our past episodes and post that up. Um, Give me a second on that. I'm actually like Googling our past episodes right now, but it's a link, and then you can get to our channel and you can get all of our past episodes. But yes, we go live every single Friday, 12 p.m. EST. Some shows we have guests. Sometimes I rock it solo, like today. But yes, but definitely you can catch us every Friday at 12 p.m. EST. Give me a second because we did have a lot of like really I'm obviously biased, but I would say really cool past episodes. And let me give you our YouTube. I mean, we have on our platforms that we go. We have Facebook, we have LinkedIn, we have YouTube. So what I'm going to do is post a link to our YouTube channel, and that should give you all of our past episodes. Let me post a link right here. Thank you for that. Thank you for that question, because that's like questions like that have really helped me like do a shameless plug. Tech Behind FinTech past episodes. I'm writing it right now. Hopefully this link works, but if you Google us, you can definitely find us. And also, I know this is like so early, but September, I don't want to get the date wrong, but in September, we're starting a whole new season, new production and everything. So it should be exciting. Just giving guys a heads up on that. I just posted the links. From a man, any updates on the NFT realm? There are probably updates. I haven't dived into it. I know we have we had a past episode on NFTs and we dived into it, just giving the public an understanding of what it is, how it works, and so forth. So yeah, I think the guest was GOT. I forget the episode number, but on the YouTube channel that I posted, you can look at all our past episodes. And definitely we had a show at NFT. If you put Tech Behind FinTech and NFT, it should pop up on Google. But I haven't I'll put that on the radar for future episodes to put some updates there, Amir. That's Aisha. She says, thank you. Thank you for tuning in. So, on that note, oh, wow. Awesome solo show from Medina. Thank you very, very much. I appreciate that. Um, I'm blushing. You just can't see my complexion. But yeah, thank you. I really do appreciate that. Look, I'm gonna get kind of personal right now. So listen, some people see the show, some people like the show and make great comments, but to be honest with you, I had an extreme fear for doing anything on video, um, talking mainly video about like my profession for the longest of times, even like a recorded video. So uh just getting into this whole video thing over the last couple of years and then recording, you edit it, but then doing live was like major fear, like bump 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 heart beating fear. So to start doing it, really it took something, and then to do a solo. So I'm appreciate that comment, for real, for real. But now we're getting comfortable, and we are rolling. So that is that. Listen, guys, please tune in next Friday at 12 p.m. Yep, 12 p.m. EST next Friday. We are live back for another episode. Once again, thank you for tuning in, and you guys take care and have a great, fabulous weekend. Cheers.